Alrighty, good morning, ladies and degenerates. Happy Monday. Hope you guys are doing well. Enjoying your weekend and the kind of, I don't know what you would want to call it. Not a bull market, not a bear market, crab market, uncertainty market, FOMO market. Doesn't matter what the vibe is. Someone's making fun of another person for being either sidelined or overexposed or round tripping or missing a trade or shorting too early or longing too early. You know the vibes. Always the same thing every single week. But regardless, hope you guys doing well. We're going to go over Bitcoin plans, high time frame to kind of medium time frame. And we'll talk about CS skins because apparently that's more entertaining than crypto. True story, didn't talk to Magus in a few days. Woke up this morning. First thing I see on Discord is him posting a CS chart. I've never played CS in my life. So it's like as close to meaningless as possible to me, but I just enjoy like feeling the euphoria secondhand. Awesome music this time. I love the backhanded compliment there. Like, as opposed to all the other times when the music's trash. I love that. What's up, Sam? What's up, everyone? Let us know when the CS bear market starts so we can load up on skins. Bro, it's the same thing in CS or luxury watches or Bitcoin or any other speculative asset out there. You're always just looking for price to balance after extreme imbalance. So if we go through like a parabolic move like we're doing on CS right now, eventually it's going to correct. Eventually we'll run out of sellers. Eventually we'll find buyers. Eventually there'll be a new balance and just buy into that balance again. This is how charts usually always look whenever they come out of like speculative mania. You just gotta be patient and wait for this and just buy some. Stacking those Charizards? No, but I've seen people on the timeline talking about Charizards. My luxury purchase of, or like whatever, choice are Jordan sneakers. So if I'm gonna waste some money on something, I'm gonna buy Jordan sneakers. But the thing is, as opposed to people that keep those like in pristine condition in boxes with the StockX tag on and everything and just hoard them, I wear mine. So I'm doing it completely wrong because I'm not retaining any value, losing value by wearing them. My last couple pairs of like Travis Scott's I've worn to the ground. But every couple years I buy a new pair and then daily drive them because they're sneakers at the end of the day, man. You gotta fucking wear them. Still got morning wood. I don't understand that question, but no. What are the percentage chance Bitcoin hasn't bottomed yet? I'd say somewhere in here. I forget the exact day, but it's on stream. If one of you nerds want to go back through all my streams and find the exact timestamp of the day that I said it. But I said it on public stream. During one of these moments, I said I have like a 95% confidence interval that Bitcoin has bottomed. So what that leads you open to is like a 5% chance that it hasn't bottomed. And I still think that's true. So I think I'm pretty confident that Bitcoin bottoms in. Anytime I look for Bitcoin bottoms, I'm always looking for a divergence between momentum and confidence, right? So like we had half the people saying we're going so much lower, macro tariffs, yada, yada. We absorbed that FUD. We showed relative strength at the lows, even though that was a controversial take at the time. We rebounded pretty damn hard, and I look at that as momentum waiting for bears, right? It doesn't mean that immediate momentum has to start for bulls. Doesn't mean that we have to start in, face ripping 140, 150K move out of this first kind of recovery. But it does mean to me that I think people will come to defend these lows if for whatever reason we get down there. Now, if we're devoid of FUD, we have no FUD going on, and the S&P 500 just chads and V-shape recovers and starts a fresh one of these, there's going to be no FUD. All there is left is confidence, right? And then all that's left is a bunch of people looking to buy the dip. and probably not getting extreme opportunities to do so. So every dip will feel too shallow to be a part of, and people will kind of sideline themselves. But if we do get FUD, those are the moments we'll probably get back towards range lows. There'll probably be a lot of fear and people wanting lower prices and saying this time's different and macro this and macro that. And that'll be your opportunity to scoop cheap Bitcoin again with a simple range-bound thesis. So I can't really predict what's going to happen from here. I'm not locked in with macro. The only thing that I know to be aware of is that over the next few months, we're going to have the resolution of that kind of pause on the tariffs. There was like a 90-day pause. Whether they use the entirety of the 90 days or they start, yapping about it before then is anyone's guess. But I think that's going to be the true kind of driving force for the S&P 500 and stuff right now. But we can take a look at some stocks, which is, I was interested in doing anyways. I haven't looked at any of these, but NVIDIA, the strongest strongest stock in the stock market, pretty synonymous to what Tesla did last cycle. So I think it's worth watching for, because this is kind of like your boomer risk appetite asset, right? So if boomers want to expose themselves to kind of quote unquote risk with high return probability, they're probably going to buy NVIDIA before they buy Bitcoin. That's just my room temperature IQ take. I think they'd be more interested in buying the kind of most volatile asset in the stock market that's providing immense gains before they expose themselves to Bitcoin. So if you look at something like NVIDIA right now, you guys can kind of see that the high time frame trend that carried us. The screen is frozen. I'm looking at this. Okay, hold on. Restart capture. This has been happening to me a lot lately. Happened on the Paragon stream last week too. I really don't know what it is, but it's like, I think if I leave OBS running in the background before streaming, like if it's just an application that's open in my background, I think everything just freezes, which is weird because I can adjust music. I can adjust, sorry about that, hitting my mic. I can adjust like the intro and the outro, but the trading view freezes. So I'm glad I saw that before I just rambled for 10 minutes. Okay, we're good? We're good. We should be good. I'm looking at it now. I didn't really talk about anything on Bitcoin before too much. I'll just go back 1 second. I was basically just saying that, without FUD, I don't think you need a chart for me to, go through this again, but just in case you wanted to see it again. Without FUD, the S&P chads to all-time highs, right? If the S&P is just going to rip to all-time highs and V-shape recover, every pullback on Bitcoin is going to feel too shallow. We're going to be looking for bigger pullbacks. It's going to be very hard to get ourselves exposed, but the strength will be, the overall trend on the S&P will be strong. Naturally, I think Bitcoin will be strong alongside of it. What it's going to take probably to get back towards range lows is another bout of FUD. And I think you need to have that mindset that you probably want to expose yourself to Bitcoin if we get back down towards these range lows in the face of fear, right? Because we've already shown that Bitcoin is a desirable asset, whether it's just Saylor or it's just the combined composite operator of all our decision making in the markets, and we all want exposure to Bitcoin at the same time, at the same prices. That's not for me to say, but my game plan is two-pronged, right? One is follow the strength off the daily trend if we continue to display it, right? Especially if the S&P 500 is going to break through resistance here, right? The S&P 500 breaks through resistance here. We hold this as support. We hold some low time frame trends. And at the same time, Bitcoin is holding the daily trend. I want to continue betting on higher. So what that's going to look like is something like this, right? Just holding in this region, looking for it to bottom in this region, and continue looking for fresh highs. Outside of this, if the S&P starts pulling back pretty heavily, because this is resistance, right? If we just zoom out, this is a 15-month trend, something like that, over a year-long trend. This is the first kind of test, bearish test of the weekly right here. Probably should serve as resistance, but if there's any asset, and I was saying this to the Paragon boys this morning, if there's any asset in the market that is able to V-shape recover, it's going to be the S&P 500. You guys look through the history of this. I don't know how many numerous kind of V-shaped recoveries there are. This thing is just destined to kind of go up only. This is probably the most structural downtrend the S&P 500 has seen since the financial crisis. And again, I'm not going to LARP and talk about, you know, the trade war and say that it's going to cause one of these or not. It'll be in the charts, right? So, which is why I think it pays to be cautious here. The S&P 500 at resistance, Bitcoin losing momentum off the 4-hourly, and trading in this region, you want to be looking for pullbacks. The first stopping point should be the daily trend, right? So you want to be bullish off of this. Now, moving forward to what I was saying about NVIDIA, right? If I'm a boomer and I'm looking to get risk exposure, am I running all the way to Bitcoin first, or am I potentially looking at what's already in the stock market? And I think NVIDIA bottom to top has outperformed Bitcoin, right? So I would assume that boomers would want exposure to NVIDIA before they get exposure to Bitcoin. I just think that's the natural money flow. So looking at where NVIDIA is right now, it had a multi-year long uptrend. I think it's 2 years, right? Pretty much 2 year long uptrend, breaking down currently weekly bearish market structure, currently underneath the weekly trend, currently retesting the weekly trend from the other side, underside. So I think there's going to be a little bit more time necessary before NVIDIA can just, start a fresh rally. With NVIDIA at resistance, Bitcoin at resistance, I think the general risk appetite of markets should be a little bit lower. But if you want to bet on continued upside, and I'm going to take a pause here and, so I don't just keep saying the same thing again and again, you want to do so from the daily. Okay, let's scroll up a bit. That balance will be 10x from here, though. You're talking about CS skins. So CS goes 30x higher from current prices, has a 70% correction, still 10x higher from here. What's the point of owning grails if you can't wear them? That's my vibe, dude. Like, I daily drive mine. I wear them everywhere. Time to buy a Patek. I'm not big on watches, man. That's not me. I think I've subtly been influenced just from being in crypto and being around friends IRL that like watches, that have been like, oh, maybe I want one of these. But it's never been me. Like, from childhood to adulthood, it's never been a big deal for me. Sure, having a nice watch is dope. I think, maybe every man should, maybe debatable, but yeah, I don't think that's me. I don't even know how much a Patek costs. I'm sure it's over 6 figures. I don't know, man. I can think of much better things to do with 6 figures than owning a watch. It's just a flex, right? If you run out of things to spend your money on, sure, I guess buy a watch. But yeah, moving on. How do we short CS skins? Wait for daily trend breakdown. Start throwing some EMAs on your CS charts, man. Are you looking for a higher low? 84K, 90K? I think I answered that question, right? So I answered that question. If we lose the daily trend, this whole thing probably, this whole gap's going to fill in, right? So losing the daily trend, I assume that this entire inefficiency fills in and we trade all the way down to 85. This is kind of the stand for the bulls here. Ever since I panic bought 97.8K, it burns when I pee. What do you think it is, Doc? Gonorrhea, dude. You got raped by the market. Oh, I don't know if I can say that on YouTube. Whoops. Don't report me, guys. Full moon on the 15th, we're good. Mercury retrograde not till July 17th. You know what I noticed is that there's actually Mercury retrograde indicators on here. Check this out. We've gotten so silly with it. Let's see if there's anything actionable that you can tell on Mercury retrograde periods. Are they always bullish? Are they always bearish? So here's some lows. Okay, we can make the argument that Mercury retrograde was a fear event to buy. Here's the all-time high push. So it's pretty much the exact opposite. But moon enjoyers will say, well, it was a bearish event because it was the top, right? So bearish, that's bearish. Here's the Japan yen. Okay, we've got 2 extremely crazy FUD events in Mercury retrograde. This was the Israel-Iran war. Okay, so we've got 3 crazy FUD events and the all-time high push. I don't know how this factors in. What is this? The ETF sell the news? Interesting. This is somewhere after the... I don't know. This kind of feels like nothing. I don't know. This is the yearly open, so we've got like a mix of bullish and bearish events. All right, guys. What do we draw from this? Are Mercury retrogrades for buying or selling? What's the objective analysis? What's the moving average band you're using? You know what? Someone in chat tell me, has there been a stream in the last year where I haven't answered this question? It just needs to be here. Instead of impatience instead of impatience is expensive, I just need to be like, Doc's EMA indicators are EMA X, Y, and Z. It should just be on the chart at all times. Enjoys a simple life and enjoys family. I mean, I like nice things. I like nice things. It's just not watches. I mean, I just said that I spend money on Jordans, man. I think some people think that'd be ridiculous to spend a couple grand on a pair of sneakers. Like, it's to each their own. It's like whatever, you know, you're into. Sometimes you make goals and then other people think this is ridiculous. Like buying a Charizard. I'm sure there's people out there that think it's the dumbest thing ever. But to some people, it's really cool. So to each their own. Watches, just not for me. Why is ADA lagging this season? Usually ADA outperforms other alts. Same goes with Link. Brother, you are living in the past. You were living in the past. We've had 2 years of bull market. 3 years of bull market? What are we in, man? Since FTX lows, we're almost 3 years in. Right? We're so deep into this bull market. When has Cardano shown any type of relative strength over the market? When has Link shown that? Right? So you're living in the last cycle, which is 2020 or 2021. Link had one moment where it outperformed the market. Right? Look at Link BTC. What is this? August 2020. It is currently May 2025, almost 5 years ago that Link outperformed the market. Why is your baseline that Link should be outperforming when it hasn't had a move like this in 5 years? So I think you could use any altcoin, right? If you came into the market in Q4 of 2023, right? Q4 of 2023, your baseline would be like, oh my God, CAS is the strongest coin in the market, right? Oh my God, Caspa, look at this thing. It's a god, right? It just goes up only. It's dominating everything. And if you're living with this mindset in 2025, I don't think it's the right mindset. You could do the same thing with INJ. And you came into the market in Q4 of 2023 and you just go, oh my God, look at this thing. It will not go down. It's up only for over a year. Right? So don't anchor your bias to, a random altcoin that had one pump in the market, outperformed, and then has been irrelevant ever since. I look at, until proven otherwise, I look at Cardano and Link the same way. Until proven otherwise, it's got to prove to me that it's going to show relative strength against the market in a repeatable manner, and you'll see that in a chart, and you'll see that with trend structure, and you'll see that with price action, you'll see that with market structure. Until that happens, that shouldn't be your baseline. Would appreciate a few if then plans on alts. Sure, we'll do that in a minute. Sorry, it's my first stream. No, don't worry about it, dude. I always tell you guys. I just think it's funny that I just think it's funny that someone asked me once a stream. Looks like the end of retrograde period lines up with peaks and bottoms pretty well. All right, someone look up when the end of next Mercury retrograde is, and let's see if it coincides with my like completely random level here, which is July 1st, 2025. Is Mercury retrograde anytime around the end of July 2025? Tattoo the EMA settings on your forehead. Just walk around with it on a hat. 90-day tariff pause lines up with Mercury retrograde in July. Look at that. So we got the tariff pause, Mercury retrograde in July, and I already have July listed. Why do I have that? My base case has been 9-month range. So somewhere in July would be the end of that 9-month range. Not talking about the EMAs though. I mean the band itself. How does one set it up? It's a custom indicator. If you're good with PineScript, you can. If you're good with PineScript, you could build your own very easily. I had someone build it for me, so yeah, custom one. You only use SMA or EMAs, no SMAs? Yeah, I don't use SMAs ever. The COVID Black Swan ended at the end of retrograde. All right, let me see this EMA question. Yeah, so I wrote it out for you here, man. Right here. The daily trend is the 4-hour time frame 100, 200 EMA. The weekly trend is the daily time frame 100, 200 EMA. These are the EMAs I use. ADA died in 2017. I think ADA made higher highs, but let's see. I think ADA BTC may have topped in 2017. No? I actually have no idea. Yeah, so like ADA BTC topped in 2018. ADA BTC didn't even make a new high last cycle. This is where ADA BTC is now. All right, let me try to get caught up with chat and then start getting back into analysis stuff. What do we think of XMR pumping? I think it was due to that guy who hacked someone for 330 million and swapped it all into Monero, causing that candle. I think that was the main driver of that Monero pump. When you have H4 200 EMA retest and the order of the EMA is correct, how would you target these types of trades? Barn, you're gonna have to ask that question again. I'm not sure I understand your question. When you have a H4 200 EMA retest and the order of the EMA is correct, how would you target these types of trades? Yeah, I don't understand the question, sir. You know what's funny is I'm friends with so many Link Marines. I mean, it's just a fun meme. They believe in Link so much that they've like honestly convinced me to believe in Link, but I can't do it unless the chart tells me to. So alt season is over for this cycle? We've never had an alt season this cycle, sir. There has been no alt season this cycle, and the concept of alt season is flawed. The concept of alt season is just completely flawed. Like, what is the driver for altcoin speculation last cycle is basically like we believed in DeFi and that, you know, the risk appetite of market participants took people through the risk curve of buying stocks to looking for squeezes on GME and AMC and then coming to crypto and then having Dogecoin and then looking for altcoins, believing in DeFi, right? So it's a natural evolution of risk seeking. This time around, we don't have any strong narratives for crypto as far as altcoins go. There's no fundamental breakthrough in the tech. There's nothing to get people super excited on. Most of the stuff is meme coins, which we agree are all irrelevant and stupid and just kind of flavor of the month. They're fads, right? You know, you could like a pair of pants for a couple months or a year or something like that, and fashion changes, and then you're going to want to own different pants, right? Maybe that's a dumb example, but like fads come and go, jokes come and go, memes come and go. So until something changes on this chart, just like don't worry about alt season. This is the Bitcoin dominance chart. As long as this is going up, like don't worry about that. There's still going to be extreme pockets of opportunity for you to make money, which there has been several times this cycle. Every single time Bitcoin marks up out of a range, here's a range for FTX lows. When we marked up here, extreme opportunity to make money in altcoins. Extreme opportunity to make money on altcoins. Here to here, extreme opportunity to make money on altcoins. Here to here, extreme opportunity to make money on altcoins. So when Bitcoin leads the way, and Bitcoin's breaking out, and Bitcoin's trending, all these other coins in the market are going to do fantastic. You can feel free to call that alt season, but the 2021 style, open up a Scrabble bag, pick out 3 letters, type them into your exchange, and long that coin for 100 grand and make money the next morning, that type of market is long gone, in my opinion. I don't think we're ever going to have a market that is just that stupid. We have a maturing market. We have a real reason to exist. Bitcoin has a real reason to exist. It has real tech behind it. It's being adopted by institutions. It's being adopted by ETFs and everything like that. It's proving itself during FUD events like tariffs, like last summer with the macro events, right? It's getting pressure tested and pressure tested and pressure tested. And that's a sign of a maturing market, less volatility, and people understand where the money lies, how to play the game. They're getting smarter and better each cycle, each year, each quarter. Competition is getting stronger. So the opportunity for people to come into the market randomly and just be like, yeah, I'm just going to long whatever the fuck I want and I'm going to be a millionaire. I think that time's gone, right? You gotta put 2 brain cells together, try to make some money in crypto now. The full moon and new moon indicator actually back test well, surprisingly. It's funny because I came into crypto such a hater of that. I was like, this is the most ridiculous thing ever. And the longer I'm here, the more willing I am to be like, yeah, maybe there's something to that. Looks like it'll start mid-July. That's funny. All right, I lost where I am in chat. I might skip some questions just to get caught up. I have no idea what TF, CS, and Mercury retrograde are. Yeah, don't worry about it. Genuine question: Why are CD people so toxic this cycle? I don't know, man. I surround yourself with good people. You won't see it. I don't really see that much toxicity, but I really try to filter out who I follow. If I find someone being annoying, I just mute them, and then I don't have to deal with their stuff on my timeline anymore. You can curate your feed, man. Doc, why is a trend line drawn on the 4 hour called the daily and the one on the... That's just part of my system, bro. The best representation for me of a daily uptrend is by using the 4 hourly 100 and 4 hourly 200 EMA. So on the daily time frame, this is the best representation for me. On the lower time frames, like 4 hour time frame, it becomes the 13, 21, and 34. On the weekly, the best representation of the weekly trend for me becomes, like, here's a great example, the daily 100, 200 EMA. It's just how the math works out. You can also spend some time brainstorming this on yourself. EMAs are just, it's just math at the end of the day. You can change it to the weekly, instead of the daily 100, daily 200, you can change it to the weekly, like 13, 21, 34 as well, right? It's all going to kind of amount to the same thing. So basically, it's going down for ADA and Link until the next bull run, which is 4 years from now. Now, I think you completely missed my point, sir. I think you completely just went over your head. You completely missed my point. ADA and Link have not been relevant in quite some time. The notion of cycles is also a flawed notion, in my opinion. I don't really subscribe to this 4-year cycle theory that every 4 years we're going to wake up and just magically be granted the opportunity to make tons of money. There's always a driving force to price. It's not just kind of this magical, fantastical thing for no reason, in my opinion. The more and more 4-year cycles that form, the less and less Bitcoin is going to be reactive to these 4-year cycles. Everyone keeps, for example, looking at this cycle and saying, we haven't had a 70% correction on Bitcoin yet, or 60% correction. Well, Bitcoin this cycle has shown you the 20 to 30% corrections is enough to absolutely decimate the entire altcoin market and put some of these structures into what appears to be bear markets, right? So the dynamics of this cycle have changed completely. The fact that Bitcoin marks up ranges for 8 months was not a period last cycle. Like, everything continues to evolve and change. So to have this notion in the back of your mind that assets that were relevant in 2018 will now be relevant in 2028 because they simply were relevant once upon a time in 2018, I think is a flawed notion. There needs to be a reason for people to come and buy and speculate on Link or Cardano. It's not going to be just this magical, fantastical time period that's going to allow you to speculate on Link and Cardano just because a year, just because of the name of the year, whether it's 2024, 2028. Doc, you're a bullish Pepe, right? Love to hear thoughts, sir. I haven't been bullish Pepe in a long time. I've talked about this over the past few months that I always want to see when we have an accumulation and we mark up, I want that retrace to form a higher accumulation for a next potential higher high markup. Anytime we get an accumulation range and burge right back into that old accumulation range, to me, this is a failure for the asset to reprice. Basically, we're not able to find demand any higher relative to the last demand. Therefore, we are not repricing this asset from an asset, let's say, worth $1 to an asset that's now baseline worth $1.5. This failed to occur. All that happened was that we had a brief moment where demand overcame supply, and then we retraced right back into that same accumulation. This is how Pepe looks like for me. So the next time Pepe marks up, I'm less bullish on it doing something like this. What I'd say is more possible is that it's just going to put in another kind of crazy pump. Maybe it makes new all-time highs, maybe it makes equal highs, maybe it makes a lower high, but what's more likely is it'll probably just pump and retrace back into this asset. Let me give you an example of a coin that looks like this, that's done it multiple times. It's something like a Bonk. I think that Bonk is in that category of an asset that when you're bullish on Bitcoin, bullish on crypto, bullish on the market, you can pick up spot in a risk-defined manner, play a massive, massive pump and run up, and then look for it to kind of just fizzle out and retrace back to baseline. I think my base case is Pepe kind of is wound up in this category now because the first time since it was listed, the first time since its inception, it did something where it retraced back into this kind of old value. So I think Pepe kind of winds up doing something like this for a long period of time, maybe even multiple years, and then we'll see, if it's ever able to make a baseline, price adjustment where it's valued at $10 billion standard, the same way that like SHIB is, I think, you guys can correct me if I'm wrong, I don't remember the market cap, but like this is what baseline $10 billion market cap, right? That's something like this. Pepe has found a home somewhere at, I think, 3-4 billion. Correct me if I'm wrong. Do you use Kiyotaka TRDR exo charts? I use Kiyo. I've been using it only for the past like 5 weeks. I started using it like 5 weeks ago, so I don't really have like a strong thesis, a strong like recommendation for it yet, or like, I don't have any strong opinions on it yet. That's what I'll say. Which moon indicator is the best? There are many. That's too funny. Any tips for not getting shaken out of trade? I cut my trades when I see Bitcoin and the rest of the market tanking almost always because you don't have a plan. You don't have a surefire plan before you enter a trade. You need to enter a trade, understand your invalidations and where you're wrong before you even click market buy or limit buy or whatever. Before you enter a trade, you need to understand where you're right, where you're wrong, and when your invalidation hits, then you can close your trade. You can't just open up a trade because you're like, looks good, I think it should go up. And then along the course of the trade, something looks bad and you go, looks bad, probably should close it. That's not the way to trade, man. You need to understand where you're wrong. And if you don't understand even what I mean by that, if you don't understand what an invalidation is, you need to start from scratch. Find a trading system you drive with, and build a structure to your trading from there that allows you to understand what you want to see in a trade, what you don't want to see in a trade, so that you can execute, know where you're wrong ahead of time. And if you get invalidated, you can close your position. Otherwise, you know exactly what you're looking for. If you don't know what you're looking for, I think you need to take a step back and find some structure to your trading. Is ETH becoming more irrelevant? Yes. It's becoming more and more and more irrelevant. Do you ever employ fibs or volatility metrics? Only the mid-range tool. So whenever I draw a range between two levels, let's call this our range high and range low. If I want to find a mid-range, I use the fib tool. So I'll just grab this, take the high, take the low. Bang, I've got a mid-range. That's the only thing I use Fibonacci's for. What are your thoughts on hype, ETH, BTC locally? Okay, so let me go through some charts real quick. So we had a quick talk on Bitcoin open stream, and then I've been kind of talking to chat for the last 20 minutes. So let me go back and talk about more thoughts on Bitcoin. All right, so I briefly mentioned earlier that I want to see Bitcoin show some resilience at the daily trend, right? So if we look at, let's look at the 4-hour consolidation markup. The trend of choice during this markup was a 4-hour trend, a lot of affinity. Every kind of retest of the 4-hour trend was a buying opportunity to look for higher prices. 4-hour trend loss for me, base case always is a gap fill to the daily. So the minute that the 4-hour trend is lost, my bias becomes tagging the daily. It doesn't always have to happen in one candle. It can happen in several. It can crab around. But eventually, if I want to be bullish on high time frame trend continuation, that bias is going to come off the daily trend. We have some equal lows in this region. So obviously, if we run these equals right around 92.7 into the H4 100 and show some strength, reclaiming the yearly open and breaking this 4-hour downtrend, in my opinion, that is the right environment to bet on trend continuation. So number one, want to see us hold the 4-hour trend. Maybe we front run these, maybe we run these. It doesn't really matter. The object afterwards, though, is we must break the 4-hour downtrend. If we find a local bottom off this daily trend, but we continue getting bullied by this 4-hour, there is no swing trade opportunity until this breaks, right? So keep that in mind. It's not like I'm going to sit here holding swings in a 4-hour downtrend. I'll be looking for this to break. This is the first point of interest where something like that can happen. So that's what we're watching for. If and when we hold a region down here, we break the 4-hour trend, the idea should be to look for new highs. If the daily trend fails, in my opinion, a lot of this high time frame move is going to retrace, right? Meaning, I think we're probably going to end up all the way down here into this breaker. So this breaker is the up move before the down candle that ran liquidity. This is the high that led to the low. This is the break of that high. So that's a break in market structure off the weekly. Trading back into this is looking for an opportunity for us to, on high time frame, to set a higher low. An ideal location for us to do that is taking out this flat monthly open from, I believe, weekly open from April. What am I saying? Getting all types of tongue twisted. This flat weekly open from April would be a pretty nice region to look for that kind of bottoming structure, which would end up looking something like excessive selling leading to slowing momentum, low time frame trends breaking, low time frame market structure flipping from bearish to bullish, within the context of a high time frame breaker on the weekly, and within the context of a higher low relative to the low that we set with the kind of tariffs and FUD. So something in here. So if the daily trend fails, I'll be looking for like 84, 85K. During a review, how to tell if your trade was lost because it was a bad trade or unlucky. So if you're in your kind of early stages, you're gathering data, right? And in the data gathering stage, you may be taking, what I would recommend is don't take more than 4 to 5 type of setups. So what does this mean? If you're someone who wants to trade price action or like ICT concepts, one type of trade would be like a liquidity sweep. Another type of trade would be like market structure break into looking pullback for a breaker, right? Another one would be like an FEG. Another one would be like Monday's high, Monday's low, right? you should limit the amount of setups you're taking to like 4 or 5. So I just listed like 4 or 5 there. What you're doing now is only taking trades within the context of those setups. Give yourself like 3 months, gather a bunch of data. Out of those 3 or 4 setups, you're going to have a higher hit rate on one of them. Then it's your job to only take that one setup. You're only taking the highest hit rate setup. And then again, you'll learn the nuances of that setup. And you yourself as a trader will know, because of the repetitions, whether the fault was on you for front running your entry, sizing poorly, revenge trading, trading your P&L curve, right? There's so many things that are going to be your fault. Scaling into a trade versus like taking the trade with full confidence when you get your trigger. Chasing a trade. Like there's so many things you could do wrong. Taking a trade that you didn't even plan on taking or something like that. Those are errors that you're making, right? And other things are just, hey man, you're not going to win every trade. Sometimes you have a perfect setup, perfect execution, perfect trigger, perfect invalidation, and you still get invalidated. You yourself are going to be able to answer that question versus me answering it for you once you have enough reps under your belt. That's an experience-based thing. So I don't know how you're trading, so I can't answer that question for you. Which alt are you eyeing to accumulate? I think the top of everyone's list is going to be FARTCOIN. This thing has been an up-only monster. If there's any opportunity to buy this thing, like down here, I will jump on it. 50, 60, 70, right? Anything like that where we get like a 50% correction, I'll take the opportunity to buy FARTCOIN if we're granted that. Outside of that, might be SUI. Might be SUI. I don't have any strong convictions as far as altcoins go yet. Like this thing is damn clean. This thing is ridiculously clean. I'm just setting up some stuff for myself. And then I'll get back to yapping in a second. Okay, so let's go back to the high time frame. I mean, out of all the coins in our market that were just in brutal downtrends, I think SUI had one of the most magnificent rallies out of that. Like Bitcoin obviously looks fantastic out of its bottoming structure. SUI is another one that looks fantastic out of the bottoming structure. I don't know if SUI is going to give the opportunity to buy at $2 again. There's a lot of overlapping kind of support in this region, right? Big point of breakdown, accumulation range, break out of this accumulation range, daily trend, weekly trend. Just so much opportunity in this region to kind of buy. And even if you like drag this over, right, you can kind of just look at this was support, right? Maybe this region, if we dip back into this, would be an opportunity to play trend continuation on SUI. So I don't think SUI is going to give you that perfect opportunity to buy it too. I think it looks really, really strong. Yes, this is kind of junky distribution, but as long as you show the affinity around like $3 to like $2.90, I really think there's an opportunity to play trend continuation on SUI because not every coin needs to just sit and crab for like 3 months. Strong coins just rip out of here. Let me remind you that SUI, out of our August bottom, right? This was our August bottom for the Japan yen trade, and it just kind of put in like a little bit of a range and kind of went up only. SUI was, I think, at all-time highs before the election. So Bitcoin broke out November 6th. Let me try to find November 6th. That's right here. This is where Bitcoin broke out to new all-time highs, broke out above 70K. SUI already set new all-time highs, right? So based on the structure here, I think it looks fantastic. And I think like dips into like $3 are for buying. It got front run already. And these are like the kind of backup plans that I was making here. I think this region should be held around 330. If 330 fails, you're probably looking for a sweep down here at 315. How do you define a trend break? H1 candle close above. Trend break is a combination of market structure and, yes, closing above the trend on the time frame that you're using it. So if I'm using the 4-hour time frame, I'm looking at this as a trend break. This candle right here. yes, we did pump higher, but the fact that we're starting to close below the trend gives me that light bulb moment in my mind that we're not as strong on the trend as we once were. And we're leaving a trending environment and ending up in a more kind of choppy, distributive, range-bound environment. This happens many times on assets that you'll get this kind of fake out, it'll pump again, but that pump doesn't really lead you into trend continuation. So I always look at these and kind of mentally go, yeah, the trend is lost. It's probably going to be at best a range-bound environment. And at worst, it's going to end up breaking down a little bit later. If you look at the hourly time frame, it's kind of the same thing. You look at the daily time frame, daily trend, same thing, so on and so forth. The nuance and combination here is you always want to look for market structure as well. So if you have a trend and you're in bullish market structure, you keep on setting higher highs and higher lows. Even in this context, if you close below the trend, but you're maintaining this market structure, if you get back above it, you're probably going to get trend continuation. These are the fake outs that you should be aware of more because market structure is still intact. And trend trading isn't just focusing on an EMA. Trend trading is a lot of price action trading and price action concepts as well. Just trading EMAs alone, I don't think is going to make you successful. You need to add a little bit of context to what you're trading. Flat open candles, isn't that what Jim used to yammer on about? I think he's famous for this one. I don't know if he said, like, I personally haven't heard him say any other one, but I remember him talking about, and it wasn't just him. Maybe it was just him. I don't think it was just him. I think it was a lot of people talking about like this one right here. In 2023, the yearly open flat bottom candle. Look, man, it's a point of interest. When we draw a demand block, it's a point of interest. It's an idea or an area where you can get a reaction. When you have a wick on a chart, it's a point of interest. It's an area where price can trade into and you can get a reaction. When you have an EMA, it's a point of interest. It's an area where price can trade into and you can get a reaction. You have a horizontal SR level. It's the same thing. All of these things are the same thing. None of them are gospel. None of them are these like absolute certainties that they must happen and they must get touched and they must get this and they must get that. Nothing has to happen. But they're points of interest for you to execute trades on if you get price in that location and you get some kind of like either low time frame triggers or market structure breaks or trend breaks or whatever. Literally every indicator falls in this kind of realm. So people like to shit on an indicator or a system or a person. I think it's all really immature and dumb. There's going to be times where I say stuff and it doesn't happen and then people yap at me. There's going to be times where it happens to other people. It's all just boredom, you know. While we're all waiting for trades, we have nothing to do but yap at one another. So keep that in mind. We'll take a look at... No, I haven't really looked at any altcoins yet. How come you don't short? You seem to have good directional bias. Because I've been long only, so like let me... It's a good question. Somebody asked me this yesterday on Twitter as well. So I started trading kind of full time in this junk right here. And obviously my bias was down, so I was predominantly shorting. I would take longs too, but I would predominantly short. I became a profitable trader, consistently profitable, consistently being able to have a P&L curve that looked like this over, I think it was like 3.5 to 4 month stretch is like when I became very confident in my skill set, somewhere down here, right? That was the moment. It was like in here, actually, if I'm being honest, like somewhere in here. And that was taking 99% shorts. Why did this happen? Because throughout this was my data collection period. What is working for me? What's not working for me? I figured out what worked for me and what didn't work for me. And all I said is, can I just do the one thing that works for me again and again and again and again? And I started doing that. And guess what? The P&L curve started going from like this to like this, just because all I did was cut out all the crap that had a smaller hit rate. So shorting liquidity sweeps or order blocks or trend retests or anything in the context of a high time frame downtrend, was the most profitable strategy, right? What do you guys think is the most profitable strategy for a market that has been doing this for 3 years? or 2 years or whatever long it's been. Probably taking longs within the context of a high time frame uptrend. Yes, there are long opportunities of reaccumulations and sideways and altcoins going to zero. I look at that as my vacation time. I locked in last year for, like no life did, right? I did that in 2022. It was basically no lifing markets, no lifing in 2023, no lifing in 2024. This year, I said to myself, I want to take 6 months off and not trade. I just want to close computers, close screens, not be on Twitter for 6 months. I didn't actually end up doing that. So the way that I get my recovery is basically just trading one side of the market. When markets are going down, I just make my game plans, and I was like, this is where I'll long again if price gets there. And during that time, I can take a step back and enjoy real life. Thoughts on Popcat? Yeah, let's we'll start going through alts. Like the streams. Jesus, Lucifer. All right. We won't read the entirety of the thing, even though you're cracking me up. Yeah, I appreciate if you guys could leave a like on the stream or subscribe if you're not subscribed. It does help me out a lot. I do want to grow this stream. I said this a lot on stream. Is I don't give a shit how many followers I have on Twitter, but I would love to continue growing the stream. I think that'd be really, really cool. So yeah, liking the stream, I think, gets it trending on other people's algos. Like if they're interested in trading content, this stuff will appear on their recommended, right? So it'd be pretty cool. Anyways, I think we're good. We covered everything we wanted to cover on Bitcoin. I talked about high time frame. I talked about low time frame. I talked about how we're going to get trend continuation on Bitcoin, if this is going to give us trend continuation, if then plans, 4-hour trends. Let's take a look at the 1-hour trend, because this has been bullying us all day. So yeah, we still have this really strong 1-hour trend. We are showing support at this kind of 8-day value area low. So if we take a kind of a volume profile from this crab right here before we broke out, the value area low was right here. So we're finding support at the value area low after kind of knifing through the entire value. We have the hourly trend right here. If we get kind of an hourly trend break, so let's say we do something like this and we pop upwards, just recognize that we still have this beast to deal with. And this, I'm calling it a beast because this is the trend that took us from 85K to 98K, right? So it is to be respected. Probably if we run into this, if we squeeze from the hourly to the 4-hour, it's probably, in my opinion, likely to reject, and then we'll come down to the daily. So all that's covered. What I want to do is move on to something like a Solana quickly. I tweeted this out earlier, but if you guys are confused on where we are, I want to continue using Solana as an example. And I think it's a perfect example because it's a coin that's a top 10 coin that did a 20x this cycle, not more. I don't know the exact bottom to top. Insane returns, top 10 coin, it's third in the market cap rankings or fourth or something like that. And held structure the entire cycle. So from the FTX lows all the way up into the all-time high break, it held structure. It held weekly bullish market structure. It held the weekly trends. And look where it is right now. It's setting a lower low and a lower high, right? This is a lower low, currently lower high at the moment. The weekly trend went from being bullish to now being bearish. We're tracking and testing the underside of this weekly trend. We talked about this last week and the week before as well, right? What it's going to take for Solana to push back up is first breaking, fumbling here. First, breaking the weekly trend, right? So we literally need to get above resistance. Then breaking out of this 2024 value area high. Basically, we spent, I think, 80% of the year last year trading within this composite. So kind of the same way that I showed you on Bitcoin, dropping back into an old composite usually means that you quickly trade to the other side. Just showed you this on Bitcoin on low time frame. Probably a good concept for anyone that doesn't understand, right? So here's your value area. Here's breaking out of it. Here's reaccepting back into it. Quickly trade from the high to the low. Kind of just knife right through it. There's another really good example on high time frame here on Solana, right? Again, accept into it, quickly knife all the way to the opposite side. So we have to break the weekly trend. We have to escape from this value trap once again. We have to build new bullish market structure, and we need to start trending on the daily. So for people that are feeling like extreme FOMO that they're going to miss out, well, here's a trade that you can just take, right? Like if Bitcoin just blows through, it's going to carry the rest of the market with it. Rising tide lifts all boats. You can always look for the opportunity to long Solana in this scenario. Right? Here's an opportunity for you guys somewhere down the boat if you like miss everything and Solana ends up in this location where we're trading above this value area high, trading above the weekly, you can just simply long a retest of the daily trend whenever you get it, right? And you can try to aim for like 300 again. That's Solana done. Let's talk about ETH quickly. ETH has had every opportunity over the past like week or 2 weeks to bridge this gap, right? There's no resistance locally speaking for ETH. We've taken back this support before this point of breakdown. We're trading back above here. We took back the daily trend that has been downtrending since pretty much the high of the year, right? We have a gap to the daily. We have a clear range high. We have a clear range mid. ETH is just being turbo disappointing and doing nothing, right? If you really wanted to bet on ETH, you're trying to get yourself exposed as close to range lows as possible, which is about 1750, with your invalidation being range low loss and daily trend loss. And you're looking to gap up to the weekly, but no one's bidding this thing. So, you know, like that just, it's just embarrassing. It's literally embarrassing that like this is the only bounce that ETH is getting after dropping this hard. So yeah, I don't really know what to tell you guys there. If you want a long ETH, I think it's clean, but don't expect, you know, don't really expect anything. There's like, yeah, that's all I'll say. Let's go to FARTCOIN. FARTCOIN still in bullish market structure, still holding the daily trend. I'd say it's starting to get a little bit of momentum loss, meaning this consolidation was a little bit shorter. This consolidation is spending a little bit more time here. If you want to be bullish, you want to do so off the daily trend. You got a nice opportunity to do so. Liquidity run, almost tag the daily. Very clean opportunity to long FARTCOIN here. It's still trading underneath the 4 hours. So if you want to play like trend continuation, you're looking for this consolidation to break to the upside, hold above local value, and then play trend continuation up to like 120 again, which would be local range high. Otherwise, if this rejects, you're looking for either the daily or this range low, right? Those are the opportunities you have to long FARTCOIN. So here's a very clear entry. Obviously, we all missed that. I don't know if anyone's in that. The next thing to do would be come to like the hourly, look at this as a local value. If you get momentum outside of this local value, you can play trend continuation because that's going to be your 4 hour trend break. Look to play to 120. If you get a breakdown, this is your clean range low right around 99 cents, 98 cents, something like that. If you get daily trend loss, that is going to be an extremely high signal. Meaning we've held this pretty much since the lows, right? This held us in our downtrend. This held us in our uptrend. If we lose the daily trend, expect a bigger than normal type of correction, probably down into the 60s, 70s, something like that. That's what I would be kind of expecting. You can always cross-reference FARTCOIN with Bitcoin, right? If Bitcoin's trading at range lows or Bitcoin's trading at a high time frame kind of inflection point where you want to be bullish on Bitcoin, and FARTCOIN's trading like at support or maybe at the daily 100 EMA and you want to speculate on FARTCOIN, it's a good idea to do so because you're confident in Bitcoin being in a kind of a bottoming location. I don't think there's many other altcoins that I want to go through. We can go through like Hyperliquid, same kind of plans, right? Everything I just said on FARTCOIN, you can kind of just mirror the exact same thing for Hyperliquid. My analysis is not going to change here. Right, really clean levels, really clean trends. You know what I'm going to say if daily trends are lost. You're going to looking for big pullbacks. Doc, sometimes the market structure is intact in the 4 hour, broken on the 1 hour. How can I action in this case? Here's a good example. Here's Bitcoin. Hourly bullish market structure. Hourly bearish market structure, right? Taking out the low that led to the high. starts losing the hourly trend, now rejecting the hourly trend as resistance. 4-hour market structure. We could still look at the 4-hour trend and holding in here. I know that, you know, this is the low that led to the high. If we want to be bullish at the 4-hour and we expect the 4-hour trend to continue holding like it has done from 85K, what do we need to happen first? We need this hourly trend to break. So you as a bull in this high time frame location who is looking for the 4-hour trend to hold and for this to continue pumping upwards, you can always simply just wait for the hourly trend to break. You can look for hourly market structure break, hourly trend break within the context of the 4-hour trend level, and then look to get long off the 4-hour trend. What is a 24 CVA? What is significance? It's a composite value area. So value areas can be defined as significant regions where price found balance, right? So just a long prolonged crab region, right? So like something like this. This is February of this year. February 2nd all the way pretty much to the end of February. February 24th. February only has 28 days anyway, so it's pretty much the entirety of February that we spent in like a 3 to 4 to 5% range, something like this. Really, really low volatility, 3-4% range. If you use a fixed range volume profile to clean up these highs and lows for yourself, you eventually come away with, oops. You eventually come away with very clean value area highs and value area lows. This is called a volume profile. And it just simplifies trading for you, right? These become composites, right? Later on, right, when you leave this, what you can do is just highlight it with like a rectangle, delete your volume tool, and when you get back to it, they can be significant regions to find resistance. If you find acceptance inside of a composite, you can trade to the other side. So think of it like a range, right? So look at what Bitcoin did here. Here's an example. Found resistance forever, finally broke into it, quickly almost traded perfectly to the opposite end. When we fail and drop back into this 8-day composite, we trade from the high to the low very quickly. If you look at Solana, the example was pretty much for 8 months, right? We traded in this range, right? 252 days out of the year last year, we kind of just traded ping-ponging between these levels. Using the fixed range volume profile, this was your value area high, this was your value area low. Can you talk about how you manage your portfolio? Once you've built it up to a decent size, maybe 100, I'm assuming you mean like 100K. You're not putting it all into one trade. So what are you doing with the money just sitting there? In environments where I think that the market is not trending, meaning I believe that we're in some type of range like this, like a Solana range like this, I'm looking for accumulation ranges on altcoins, right? So an altcoin to go kind of sideways, so I can define my risk and put chips into spot in those altcoins, especially in altcoins that I think can make big moves, right? That's what I'm doing with the majority of my capital. Looking for high time frame spot trades. If I believe that the high time frame trend is intact, and if I believe that my coin or the coin that I'm looking at has the opportunity to make a big high time frame move, I'm trying my best to buy the bottom half of accumulation range using spot. That's where the majority of your gains should go to. Now, however you separate that money into 3 coins or 25 coins is up to you. I would recommend doing it into like less than 5. Honestly, like 3 is perfect. 1 major, 1 altcoin, maybe 1 meme coin. Doc, in your experience in the industry, what is the average annual portfolio returns of the top 1 to 2 trader halves? I have no fucking clue, dude. You'd be surprised to know this, but people don't share that stuff with you. I shared in 2023 and 2024 what my annualized returns were. I did a post on CT about it. I screenshotted the P&L curve and I shared it. I don't think that's common practice for CT. Guess why? Most people don't make that much money. So I don't know. Adept traders also don't really care. Like most of them, like I'm kind of grown this way, is like the better and better you get, the more repetitive you show your competence to the world, the less and less you care about clout, the less and less you care about recognition, followers, and all that. You kind of just want to focus on getting better. So I'm sure there's a lot of really great traders out there too that don't even post, don't even tweet, don't even care about social recognition. The people that I'm close to, my friends and stuff like that, they also don't tell me, but I also don't ask them. I don't ask them what their returns were because it doesn't affect me, right? My job is not to compare my returns to them. My job is not to say, oh my God, I did a fucking 40x on my portfolio from this point to this point, or I did 100x on my portfolio from this, but that guy did 1,000,000x. I underperformed. Holy shit, I'm dog shit, right? That's not the positive gauge of growth. Your growth should be measured against yourself. In the beginning, you're always trying to measure your performance against yourself quarter to quarter to quarter to quarter, and even as you get more and more and more advanced. And then after a certain amount of years, you need to do the hard thing and ask yourself, am I beating the indexes? Am I outperforming Bitcoin? And if you're not outperforming Bitcoin after several years in the industry, I don't know, man. Maybe, maybe it's this game ain't right for you, or at least, keep your day job, right? Don't become a full-time trader. I don't know how to say that in a nicer way, but the ultimate goal is to make sure that you're beating Bitcoin's returns on a year in, year out basis. And the next thing you're supposed to do is just continue and focus on trying to beat your former self. Sometimes that's going to translate to portfolio return beating. Like, okay, yeah, my returns in Q3 were better than Q2. That's fantastic. In other quarters, you're not going to outperform your prior quarters. Obviously, you can't just go up in infinity forever. But has your skill set improved? Did you focus on something that quarter where, like, hey, my weakness in markets is trading this asset or trading this time frame or analyzing pivot points or analyzing trends, or I always get sidelined. Like, try to use the kind of downtime, if you don't think the market's that fruitful, to at least improve parts of your games that are lacking, right? That's the true measurement, not like, hey, what are the top 1% or 2% of people making? It's irrelevant. Like, how do you even prove it? If someone tells me, hey, man, I got 100x on my portfolio last week, I'll just say, good for you, man. Whether it's true or not, it doesn't affect me. It's not going to change the way that I trade. It's not going to change the way that I attack the market. And the more I let it influence me, the worse my mentality when it comes to my trades, because I'm always competing with this shadowy, imaginary figure in my mind that holds no relevance. Just showed up. What did I miss? A lot of stuff, but it's all timestamped. Come back in a few hours or probably tomorrow. Everything will be timestamped. You can go through whatever you feel like going. You missed all the fun. Go home. Move? Yeah, screw move, dude. Are you surfing in Florida? No, but I'd love to. Yeah, we haven't gone yet. My girlfriend and I should start going. Should get some surfboards and get some surf lessons. I don't know why we haven't. Like, the beach is 20 minutes from my house. Fixed range volume profile. I mean, I could do a whole hour lecture on fixed range volume profile. Basically what it is, do you understand let me ask you this. Do you understand the concept of a range? Because if you do, you can simply just use range bound trading techniques within a value area, right? Trades above value area high, fails to accept above it, trades back in, leaves a deviation above the highs, you look for the lows, right? There can be a trade here to the POC and to the value area low. Fails to close below the lows, trades back in the composite, there's your deviation, look to trade towards a POC and look to trade towards value area high. You could trade a range this way. Sometimes you can use a fixed range volume profile because I think it cleans up the highs and the lows a little bit for you. Sometimes ranges are super clean. Like, I mean, crystal clear clean, and you could just use ranges. Sometimes ranges are really messy, and it almost feels better just to use fixed range volume profile. All right, caught up with chat once again. Hallelujah. Let's look at some other stuff. I haven't talked to you guys about Total 3 in a long time. You guys will remember me tracking this a lot in December, January, February, etc. But I don't think I've looked at this in a couple weeks. This is the doodle that I think I did on stream. Like, again, if someone wants to go back, everything's timestamped. Feel free to find the Total 3 chart. But I'm pretty sure this is a doodle that I did on stream. And I basically looked at this sometime back in January, February, and said we're going to need a prolonged accumulation range on altcoins and stuff like that. This will be clearly represented on Total 3. It's going to need to go sideways for some while. It's not the most accurate doodle of all time by any means, but nonetheless, we have been kind of trading around, what is this, 700 billion, excuse me, market cap since February 3rd, right? And we're in May 5th, so 2 months. A couple more weeks or months of sideways in this region, and I think there's going to be an opportunity to have a high time frame trend again. Right? I don't think we're there yet. Let me pull this up real quick. So here's your weekly trend, right? And look where alts are finding resistance on over the last, what is this, 12 days, right? So a lot of rejection in here. I wouldn't be surprised for us to come all the way back to the lows. General representation of probably the entire altcoin kind of ecosystem. We've already looked at Bitcoin. We've already talked about the supply region that it ran into. We've already talked about the 4-hour structure break. We've already talked about building a composite, failing to hold outside of it and retracing back in it. You know, we've pointed out altcoins like Solana trading at resistance. FARTCOIN pretty close to resistance. Let me show you guys this one. I think I already did this earlier in the stream. Right? This has been a very significant key level for FARTCOIN going back to like December, right? So 1 time, 2 time, 3 time, 4 time, 5 time. Even here's a bearish rejection 6 times. So we're trading into 130. I mean, $1.3 billion market cap is not very small anymore either, right? Especially because this is up like 6x off the lows. Probably a good opportunity to retrace. We talked about Hyperliquid. I'm trying to look at any other altcoins that have been good. We talked about SUI, which looks pretty good. Probably haven't talked about XRP, which is funny that this has like become a staple coin to talk about, but it's important to recognize that XRP is probably one of the better looking altcoins in the entire market, being is that it's still holding above range lows and it's holding the weekly trend. If I go down my watch list, I think there's only 3 coins that are holding the weekly trend or above it. Bitcoin, XRP, FARTCOIN, SUI. That's 4. I don't think there's a 5th. Maybe Hyperliquid, so that's 5. So those are the 5 coins in the market that are holding above the weekly trends. Everything else is below it. So, you know, you may hate XRP, but always, you know, pay attention to what is actually showing strength on the market. Folks, if you use volume profile, do understand that the extremes are developing. It looks super clean in hindsight, of course. Yeah, I probably should have mentioned that myself. But what Lucifer is talking about is when price starts crabbing and you're literally uncertain, like maybe it's been a couple days or something like that, and price is like stuck between 2 levels. This is when you kind of slap on the volume profile, right? We can just put it on, I don't know why I'm doing it on a doodle. I think I might be losing my mind here. Right, we'll do it like this. You slap on the volume profile, it cleans up kind of where your value area highs and value area lows is. But as price trades, so let's say we spend a little bit time up here, this value area high is going to shift higher. The point of control is going to shift a little bit higher, or it possibly could, right? If a lot of volume is done up here, value area low is going to shift a little bit higher. So the ranges will move, right? The value area high and the value area low will move. I can draw this a little bit better, right? It'll go like this. And then this becomes like your new value area high and value area low. when you break away from these like composites, right? Either you have a big expansion down or big expansion up, then it's kind of like solidified where price traded in that range, what the composite value area high is and low is. But as it's trading in there, yes, they're dynamic. They're moving every single day. So it's not just this static figure. What I recommend anytime I'm using this is don't slap it on like day one. Slap it on when you see price stuck in a crabby range for quite some time. That's the highest hit rate, in my opinion, for using it. So like when I slapped it onto Bitcoin here, it wasn't like day one, right, that I'm using it in this region. We were already like 6 days or 5 days in before I started using this. Because as you're trading over here, you don't even know that you're going to start bracketing and ranging. You kind of are just betting on trend continuation. Okay, the trend is up. You know, we're tagging the hourly trend. We may continue trading upwards. We got to tag off the 4 hourly. We're probably going to get another push upwards. It's only until price literally starts ranging and crabbing sideways for some time that you go, okay, this is kind of messy. Time to put on the fixed range volume profile tool. Time to clean up some of this junk for me and give myself a bias for like where a discount is in this crab, where a premium is in this crab, and how to look for clues that we're ready to actually expand beyond this range, either to the upside or the downside. So yeah, thanks Lucifer for reminding me to say that. Definitely makes sense. I'm trying to understand what average annual returns are for top guys to know when I reach that consistently, how much capital I need to quit my day job. How do I say this? I think we need to reframe your kind of thought process on this. Number one, if you want to go full time, make sure you have at least like 2 years of runway, right? 2 years of bills, mortgages, electricity, travel, vacations, dinners, parties, dates, everything. Anything you need, extra like pocket money, you want to spend something, like make sure you got 2 years of runway. It's a lot of money. A lot of people can't afford to just have randomly 2 years of runway. So it's not an easy ask to begin with. Not a lot of people have jobs that allow them to save for 2 years of runway. But I think that's important. That's not something that I had, but that's something that I wish I had, because the stress of not having that was pretty fucking scary. So that's important. And number two, make sure you have a repeatable skill set. So even if you don't absolutely dominate the market year one, but you have something in your back pocket that allows you to extract value from the market, I'd say better when it's range bound versus when it's trending. Let's say you like underperform a trending market, right? Everything goes parabolic and you underperform. I think that's okay, as long as you have the ability to extract value from a range bound market, because that is going to be available more percentage wise of the year than a trending market. The market's not going to trend 80% of the year. The market's going to range 80% of the year, right? So as long as you have a skill set that allows you to extract value 80% of the year, I think that's more important than saying like, what were my returns this year? Did I absolutely dominate? Am I in the 1%? And then just say like, is that enough money for you to live off of, right? Are you able to bolster those 2-year runway defenses, or are you eating into them every month, right? If you're eating into them every month, maybe give yourself a little bit more time before quitting your day job, right? That's probably the responsible way to do it. The irresponsible way to do it is the way that I did it, which is just jump in head first. Don't take no for an answer. Say that you're going to make it. Be headstrong about it. Deal with stress every day. Have anxiety. Have palpitations. Can't sleep. Turn to alcoholism to fall asleep, to deal with stress, and kind of sleep 5 hours a day for 2 years. That's the less responsible way to do it, but that's the way that I did it. Question about Paragon. I believe you give your systems in there. Does Magus give his swing and day trading system breakdown as well? Yeah, so I can do a quick Paragon shill. Yeah, everything that I teach is in there. Everything that Magus teaches in there. I think Magus has like hundreds of videos. I personally have close to 40 videos. I think I have like 15 to 20 hours of educational content in there that's strictly like system building, psychology, trend trading, price action trading, intangibles, spot picking up, like picking up spot, intraday trading. Like I have tons of stuff in there. Magus has tons of stuff in there. And that reminds me, like if you guys want a discount code, I have this available. I always forget every stream to give it to you guys, but it's still the same one. This is the discount code. Now, I've heard from people that it may not work for crypto, but I think for like credit cards, it works. So there's a link in the bio below. This will give you like 25% off, I think. Feel free to use it if you want. It's there. It's not going anywhere. At least until Bitcoin breaks to new all-time highs, because then we'll probably get rid of it. But yeah. That's very personal. It varies with everyone. Figure out what you need per month and have at least 1 year of expenses. Yeah, I'd say 2. 1 is fine too. Can you look at Tau? Yeah, sure. I mentioned it because I see far too many YouTubers lately make it seem so easy to look at VP in hindsight, where you can see the clear pivots when in reality as it develops, not always that clear. Yeah, I would say it's not sometimes. So the way that I use it is I don't use it by itself. I actually don't want to give away this. Lucifer, I think you're in Paragon. I think if you are in there, you know exactly how I do it, right? So like I caught this breakout because I'm always looking for it. I'll just quickly say it. Anytime I'm looking for range breakouts, I'm looking for expansion candles, which are like high delta moves outside of a range with shallow retraces. And I want to bet on 50% or less retrace, invalidation, reclaim, and look for trend continuation. This is like my exact entry that I shared on Paragon. This is like the exact trade that I took. But yeah, alone just using this like framework is pretty tricky in my opinion. The other thing that you could do always is like just wait for reclaims, right? And I think those are easier to trade, right? High delta moves outside, right? If you have a really strong move outside, that means a lot of force and effort is generally speaking being done to try to break yourself out. If that force and effort fails, meaning we go back to the origin of that move, whatever this person was that tried to break you out, whether it was a short closing or longs opening or someone spot buying or whatever, that effort is failing, and the belief system that this guy has that caught the breakout trade is going to fail. He's probably going to puke his position at some point. He's probably going to be invalidated and puke his position, which is going to add fuel to the fire to trade in the opposite direction. You can see this happening a lot with high delta moves at the extremes. Do you think it's a good idea to trade in college and don't get a job, like if you're young? I think you should, if you're young, you treat trading like a video game. Treat it like a hobby, treat it like a sport, treat it like a video game, something to do in your spare time. So like some people want to fucking go out and club every weekend, go to bars and stuff. Some people want to play video games. Some people want to play sports. Trading can be that thing for you. Don't put pressure on yourself that you like have to make it and have to make $1 million and have to be successful and whatever. Have fun with it, man. Don't stress yourself out. You're young. You're in college, so it means you have a career set up for you in advance. Just treat it like a hobby, man. Don't stress yourself out, but I do think it's a phenomenal idea, 100%. The younger you start with trading, I think the better you're going to be at trading, right? Your mind and body like pretty much fully develops by the time you're 24. Anything that you do to positively impact your life before the age of 24 is going to pay dividends for your adulthood. The habits that you create as a teenager, as a young adult, are going to shape your reality as an adult, man. So I think if you commit trading to being like one of those hobbies when you're 18, 19, 20, I think you'll be successful more than your contemporaries when you're in your 30s and 40s and whatever. Not to say it's going to take that long for you, but yeah. YB, I kind of just answered that question for you. You have a mental... Oh, I didn't even see Nexus. What's up, brother? Good morning. Nexus Blade Runner, the homie, man. Nice to see you in here. I love when you join the streams, bro. Yeah, YB, we just did that. Check virtuals. All right, we can check that in a minute. Do you have a mental checklist that you go through and say, yeah, this auction has failed and this trending into the next volume range? I mean, it's not a checklist. I can tell in like kind of like I've been trading it for a little bit, so it's like in the early days, yeah, it's a little bit more like stress inducing and like, are you sure? Is it this? Is it that? Do you want to execute on this trigger? Am I right about this? What if I'm wrong? There's a lot of that like mental games that happen when you're trading things early on, but as you get more and more and more comfortable with them, it kind of just becomes this clear, like, yes, no thing. Am I seeing this? Yes. Okay. High likelihood we can get X, right? Am I seeing this? No. Okay. High likelihood we're going to get Y, right? Oh, the A and B are both showing up. I like that. That means really high opportunity for C to occur, right? It's only A and it's not B. Not so sure. Maybe I should wait in a few minutes and see. Maybe I get something more clear in a few minutes or maybe a few hours, or maybe I just don't take a trade today. I'm not really highly sure if this or that's going to happen, right? That's really all trading is. And I think the more and more and more you do it, the easier it is to come to that conclusion. So you don't really need a checklist. You're just used to seeing it like so much. You have indicators included? Yeah. I think the minute you sign up to WAP, I think they just appear in here. I actually don't know how this works, man. Charlie does all the indicators. I think they're through WAP now, but I think the minute you sign up, you get them all. Thank you, Darko. Yeah, Krillin and Pierre, the GOATs. Love those guys. I learned a lot from Pierre back in 2022. I give him props anytime I have the ability to. Yeah, man, I appreciate that. 1 second. I think I had a giveaway too to do today as well. Give me 1 second. Anytime I have the opportunity to give free money away, I want to do so. So hold on 1 second. Okay, so if you guys trade on Blofin, oops, never mind, too large of a picture. Hold on, let's try this again. You guys know that Blofin sponsors the stream sometimes and give me these opportunities to give you guys giveaways. So if you guys are already trading on there, just be aware that like they're doing a giveaway and it's like a random auction or random kind of raffle. If you do enough volume, they'll pretty much give you like $1,500 bonus. So if you're already trading on there, also they call it the iPhone 16. Let me clarify this. They're not actually going to be like, what's your email, what's your mailing address, and get your like doxed information and then send you an iPhone in the mail. What they're going to do is just give you $1,500 in your trading account. They'll just give you USDT, right? So it'll just appear in there. But yeah, check it out. All the details are here on your guys' screen. The link is in the bio below. If you guys haven't signed up to Blofin, feel free to sign up. There's a link in the description box below. If you're already signed up, you can always just make another account because there's no KYC with Blofin. It's non-KYC, so like Americans can trade on there, UK can trade on there, whatever. So feel free to do that. Check it out. I think it's easy to make like $1,500. The reason I always say it's easy is because when I do these shows on stream, there's 119 people in here. 110 of you's brains just turned off. And it's like, okay, when Doc is done talking about this, I'll start paying attention again. And maybe 9 of you guys are listening to me right now. So there's not too much competition. It's probably easy for you to pick up like $1,500 really quickly. Out of those 9 people, how many of them are actually going to click the buttons? Maybe 2 of you, right? Which makes it like the odds are kind of crazy to just make some money really quickly. Anyways, that's my show for you guys. Shout out to Blofin. I appreciate them as always. Screenshot this, by the way. There's the Paragon thing. There's the Blofin thing. I try not to take too much of you guys' time doing that per stream. I stream for 2 hours, maybe 30 seconds to a minute do I like shill something. So much appreciated. My main problem is my thesis is right more times than not, but my mental plays games with me not to execute on the trade. That every single trader goes through that, man. We all have this arc where the first thing you have to do is become a decent analyst, right? Before you can become a good trader, you have to become a decent analyst. You have to have some kind of feeling that you generally know which direction the market is going when it gets to generally X level or Y level. And you're like, it's coming to resistance, it'll probably go down. It's coming to support, it'll probably go up, right? Things get more and more nuanced the more you learn, but in the beginning, you know, you get the ability to do that, right? Then you quickly learn that trading is not that fucking easy as just drawing lines on a chart and being like, yeah, it's going to reject from here, right? You learn that it's much, much more difficult to pull those triggers. You guys remember this moment down here, how I was telling you guys for weeks, the first test is the best test of this region, right? I had marked out for you guys somewhere in February that like, I want to be long down here if we trade down here. When this happened, it was not the easiest moment for me to actually click buy. I did that. We bounced up. We got the SBR announcement on the Sunday. It was not easy for me to click sell because those emotions are in your mind. Oh my God, it's SBR. What if we get continuation? But I know I have to play the high EV trade. After that, I said, you know, first test, best test is done. It's going to be more structural. When this happened, it was in the face of FUD with tariffs and macro and the SPS breaking down, the XPX down 22%. It's not easy to click that button and stick to what you know for the analysis, right? When we're trading up here and the noises become, you're sidelined, you're not going to make it, like you're underexposed, you're this, you're that, we're going up only. Did you sell your bags at the bottom? And I say this is probably going to happen. I even do the doodle where we do something like this. We trade up, we trade down. That's just analysis. That's gut feel. Actually executing on that and closing the trades when you get the signal to close the trades is hard to do. This is what you learn through experience and doing it again and again and again and again, and then learning to trust yourself in those moments that like I owe it to myself to execute on the trade that I planned. If I'm wrong, so fucking be it. I'm wrong. End of story. Maybe I'll learn something from it. No one's right all the time. But if you're not taking the trades that you're planning on taking, what are you doing? You're denying yourself the experience that you so desperately need to improve. So just take the trades. Like, you're going to lose some money, but like most people are losing money anyways. So your fear of losing money is preventing you from getting the experience. Reframe your mindset even. Like, start thinking of trading as like going out to dinner, right? You go out to dinner with a girl, go to a nice restaurant. You're going to get the wine, right? Get the appetizers, get the wine. You're going to end up spending a couple $100 anyways. That's gone in a couple hours. Maybe that date doesn't work out. You never see her again. There's no second date, whatever. You're not sitting there and thinking about it 2 weeks later and be like, damn, man, I lost $200 on that. It's just like, it's whatever, right? Next date, next girl. Trading's kind of the same way. It's like, don't spend so much time thinking about like the money that you spent to get experience. Maybe you learned something on that date and you're like, bro, I could, this joke worked or this whatever worked. Right? I don't know why I'm experiencing comparing trading to dating, but it is what it is. It's all the same thing. Just reframe your mindset so you're not so scared to lose some money, right? You'll make more. You keep your job. Stop screaming at me using analogies of women. I cannot. Oh my God, dude. I don't know why I went that direction. I've been hanging out with my friend Adrian too much. Adrian's influenced my brain, dude. I'm actually going to clip this stream and send that to him. And he's going to be fucking pounding his chest and be like, I fucking did it. This guy's been talking about like women metaphor for trading for like 3 years now since I've known him. If you lost all your child allocation money on poor trades and can't afford Paragon, you can always use the free daily spin wheel on WAP to increase your chances to get the free access for a limited time. No idea what you're saying, but if that's true, go listen to Lucifer. All right, gents. Hour and 40 into the stream. If we have any final questions, shoot them my way. Otherwise, we'll wrap up a little bit early. I try to do 2-hour streams, but I've yapped a lot today. We talked about all the high time frame game plans. I talked about trade setups from even these lows. First thing you want to see is an hourly trend break. Let's see if we got that. Still trading into the hourly now, but you're getting a little momentum loss for the bears, right? We've traded in this region a couple times. Every time getting a solid reaction. Probably going to get a little bit of a push up. The main issue from this location is going to be the 4-hour trend. If we can break above this region right here and we front run the daily, I would probably be looking for trend continuation upwards, right? If we're breaking the 4-hour trend, we're taking back the point of breakdown, we're closing back up in here, we should be looking for trend continuation once again, even if we front run the daily. Is it a bad idea to short hype around these levels? What is the short thesis? Is it based around price action? Is it based around trends? Do you have a high time frame level? Did we run liquidity? Let's see. Let me see if I can reverse engineer your plan. Okay, so that's a very clear swing high. We've run that high. Here's 3 drives into resistance. That's high time frame external liquidity taken. This is the low that led to that high. We've traded under this low. We have a market structure break. So it's like 3 drives, market structure break. So you're looking for kind of like a higher low, excuse me, a lower high, in my opinion, to short into. So you can dial this into maybe the hourly. Trying to look for a decent region in here. I honestly, like, from this location, I don't think I would be, I don't think I'd be shorting. I think it's going to have to drive at least up into here before I'd think about it. That's just me. This to me doesn't seem like an environment that I'd want to short. What I would short, let me give you a clear-cut example of what I would short. The market has defined these as support, right? Look at all the wicks and candles into this location. If we have a strong candle close below, right, and we're trading into this region, what I would basically say is maybe a shallow pullback, probably no perfect retest, short this region, look to bridge the gap into the daily. Invalidation, trading back above. That would be the short that I'd take, or maybe something up here, or maybe even up here, or maybe even above this high. Where we're at right now does not seem like a place where I would want to short at all. Do you use order flow like EXO? I use a lot of volume tools, but I don't strictly use like, I don't use TPO charts. I don't use footprint charts. I look at like relative volume. I look at, I wouldn't consider VWAP an order flow tool, but market order bubbles are kind of significant or signifying effort. So I use like, how would I say this? I don't use order flow in the way that other people use order flow, but I use a lot of volume analysis tools. I've started looking at order books a little bit more. This for me, this quarter from April, May, and June is a data collection quarter on whether or not I want to integrate order book heat maps into my trading or not. So I'm gathering data in a sub account, whether that is going to improve my trading, and I'm journaling the process alongside, whether it's making me take higher quality trades, whether there's an improvement on my trades, whether my confidence is improved or execution is improved, or whether there's no actual difference or I'm getting false signals. So I'll let you guys know like somewhere in July, whether or not that's going to be like a core part of my trading going forward or not. That's usually how I add tools and remove them, is give myself 3 months to use them in a sub account, see if there's any advantage or whether it's just noise or whether it's the exact same thing, right? And if it's the exact same thing, I just remove it, because why do I need more information to tell myself the same thing that I'm already doing fine without it? Why is it so hard to execute on our analysis? Because trading is a solo sport, and the only person that can get in your way is yourself. My advice: simplify your system, simplify your trades, simplify your ideas, and try to remove as much noise as possible. Whether that noise is my streams and my ideas conflicting with yours, you have the responsibility to yourself to not watch my streams on Monday, execute on your trades, and maybe come back to it on Thursday, Friday, Saturday, Sunday when your trades are done. Come back to look at what I said, and maybe I said something that was better than your trades, right? And then you have the opportunity to learn. And then the following week you can try to use some of the strategies that I talk about to help your trading. And maybe it's CT. Maybe someone on CT is yapping and their bias is the opposite of yours, but they're saying it with so much confidence, and now it's infiltrated your mind. What if I'm wrong? What if I'm wrong? What if I'm wrong? What if I'm wrong? And you don't execute on your trades. So simplify your system, simplify your ideas, remove as much noise as possible, and then just take the trades, bro. How are you going to get better without taking the trades? Just click the button, right? Click the button. In terms of execution, do you use volume bars alongside other confluences like these? Oops. Like these? Sometimes. Sometimes. Again, anytime I'm using volume, all I'm really analyzing here is how much effort is going into a move, and is that person that's creating that effort being rewarded, or are they being not rewarded? If they're being rewarded, a lot of times you're going to get momentum in that direction. If they're not being rewarded, a lot of times you're going to get reversal. So a lot of my intraday trading is based around mean reversion, and I'm looking for high effort being unrewarded, which is giving me a reversion trade back to the mean. All right, guys, let's call the stream there. I appreciate you guys for joining me. Until next week, again, if you want to check out, you know, Paragon, feel free to do so. There's a discount code. And then let's see if I still have this on here. If you want to make $1,500, I'm pretty sure it'll be pretty easy for you guys to do so. Not going to be a lot of competition. Like I said, not too many of you guys are going to take advantage of this. It's free money. Take advantage of it. Go try to make it yourself. Screenshot the stream here or pause it. You guys can see the kind of like stuff down here. That's like the requirements. And I appreciate you guys. I'll see you next week on Monday. Take care out there.